Welcome back to Squawk Box. Our next guest says that voters' anger about inflation is one of the biggest headwinds for President Biden heading into the November election. Joining us right now to talk about the political impact of rising inflation this morning is Wolfe Research head of policy and politics, Tobin Marcus. Good morning to you. The second that number came out yesterday, and you see all the headlines, this is going to be a major headwind for the Biden administration. They had been hoping, obviously, that the trend was turning the opposite way, but it has clearly turned back. What do you think?
Yeah, I think that a lot of the damage is already done on inflation, frankly. They want better data rather than worse. A soft landing would be better than some kind of acceleration. But, anecdotally, when you talk to voters in focus groups, a lot of what they say they want is for prices to come back down, which obviously is not what anyone is steering towards from a policy perspective. So I think the retrospective bitterness about inflation is going to remain a huge problem for Biden, kind of regardless of what kind of data we get in the near term. Pushing rates out does not help. But, what would really be helpful from a voter perspective is mortgage rates coming down, auto loan rates coming down, credit card rates coming down in a durable way, not, a handful of rate cuts in the months immediately preceding an election. So, at this point, it's not I think Biden's at a disadvantage relative to Trump on the economy specifically, regardless of what we get in terms of data.
Well, this is a question, we talked to Lael Brainerd about it, just this idea that you look over the last 3.5 years, and there's a lot of voters who will say, rightly, that their wages have not caught up with inflation, even if their wages are outstripping inflation today. So your view is that the current trend, even if the trend was friendly, which now it is not, but if it was, it doesn't matter because the damage has already taken place, and you're never going to be able to get back to where you were 3.5 years ago.
Yeah, change happens at the margin. So I don't want to say that it doesn't matter at all, but I think one way or another, voters are going to say, Trump's ratings on handling of the economy, I think, are going to be better than Biden's when election day comes around. So, improvement in the economy, the sort of smoother path that we get going forward, I think will mostly serve to mitigate Biden's economic vulnerability. I don't really see any version of this election where, we get to November and people say, actually, you know what, things are great. Biden's done an amazing job sort of steering us through this crisis, and we give him the advantage over Trump. I think they remember 2019 as kind of a golden period and are not thinking that much about 2020. And so, I think Biden's campaign is going to be quite populist. They're going to talk a lot about stuff like drug pricing. They're going to try and set up a contrast of priorities and values. And the Trump campaign is really going to be very focused on, hey, remember 2019? That felt a lot better than it does today. And I think there's no way that dynamic changes.
Tobin, is there anything that you think either President Biden should have or could have done, or that a President Trump could have or would have done differently as it relates to the inflation issue? Or is it that it doesn't even matter, that it was always going to be something that was going to be the hands of a Jay Powell, and whoever was the president sitting on top of that was going to be held responsible either way?
Yeah, there have been a lot of recriminations about overstimulation in terms of the scale of the American Recovery Plan that they passed early in 2021. But I think when you look with the benefit of more hindsight, and when you look across countries where nobody really managed to avoid a big outburst of inflation, it doesn't really hold up for me, the idea that, if they calibrated that down a little bit, if it had been, 1.2 trillion instead of 1.8 trillion, then everything would be fine. Like, that really does not seem correct to me. So, I think that mostly what we've seen has been a set of dislocations related to coming out of the pandemic. We've seen that across countries. It's been challenging to manage everywhere. I think it's been managed, at least as well in the U.S. as anywhere else, really, when you look at the sort of the comparison in terms of jobs and GDP growth coming out of the pandemic compared to Europe, compared to other advanced economies. And Trump's policy mix, frankly, I think looks much more inflationary when we look at what he's proposing prospectively in 2025. The combination of less immigration, tariffs, and deficits at least as high as we'd get under a kind of divided government scenario under Biden, I think all looks, pretty inflationary or stagflationary to us. So, I do think that this is a problem that probably couldn't have been avoided in the first place. And the question is, largely about Fed, management of that problem as it's emerged.